What's up, everybody? Michael Silva here. Guess what? It's July, a new month. Yes, it's finally upon us. We're about to be moving into the weekend. Keep in mind, we have a longer holiday weekend, so chances are tomorrow will probably be a low volume day. We got a lot to talk about, but I'm going to keep it pretty short today. And we're going to go over a couple of indicators. We're going to go over the indices on the shorter time frames just to get a good idea as to where we stand zoomed in. If you didn't watch yesterday's episode, I did a little bit larger picture view looking at quarterly and monthly charts. Now we're kind of zooming in here. Let's get into today's show. All right, welcome back. So the sentiment charts that I like to look at have been updated, and I wanted to go over them really quick. You can see here, asset managers now at 91.72. So just talk about just full bull mode right here. It's not 100 or above 100, but it's still relatively a very high reading as the market's pressing all-time highs. The RIDEX here too as well. You can see it's at 0.08, one of the lowest readings here in history, so full bull mode there too as well. So sentiment, extremely bullish. This here is the AAII Bulls and Bears surveys. You can see an uptick here suggesting that sentiment is more bullish. Actually, I would say this is a euphoric reading. We haven't been here since around late April. You can see the uptick there in the Bulls and Bears ratio too as well. This is important stuff. You know, it just gives you a good idea where sentiment overall is in the market. And you can look at this with a contrarian point of view. My thought process on this, looking at both asset managers, the RIDEX and the Bulls and Bears surveys, is that this is really based off of that seasonality script, right? We typically see some strength into July, and we talked about that in yesterday's video. But you need to be cautious and have a little bit of a contrarian hat here because, you know, if everyone's already placed in the trade and there's an exhaustion of buyers, well, that means when we start exiting the trade or getting out of it, you can typically see fast moves to the downside. Let's look at these sectors, how they did. Energy leading the way today. And then at the bottom, we had consumer staples and technology, which I think we'll talk a little bit more about how growth underperformed today, and we saw some value stocks play out a little bit stronger. One thing to call out is utilities up here leading the way at the start of July. We talked about this yesterday. Utilities typically has a bad month in July. So that doesn't match the seasonality script so far, but it's only one day. Now let's go ahead and look at growth to value. We talked about this in previous episodes. You can see when this indicator reaches down past this green line, that suggests that it's a little bit extended for value. So the opportunity would be in potentially growth. And you can see here from May, we shot up both in the relative strength and in the rate of change. And that move really did help propel a lot of growth stocks. Now, if we're looking at this as it stands right now, you see that it got overextended here, saying that, okay, growth might be the time to kind of let your foot off the gas and let's start looking at some value plays. And you can see here, you know, it actually still ticked higher, but today, the 1st of July, you can kind of see that there was a little bit more of a rotation into value as we saw the 10-year yield rising, which puts a little bit of a damper on growth stocks. So we'll continue to just watch and see what develops here. Right, you can't read too much into it. It was just one day coming into the brand new quarter. So you got to take it for, you know, face value for what it actually is right now. This right here is a good way to see, okay, is the market believing this transitory, not transitory narrative? Well, if inflation is not transitory, you would see tips underperform these treasury bonds. So you would see this ratio go down. However, we're starting to see this start to break out of this channel, this flag right here. So this is the early stages as the price percent oscillator did cross over and the RSI is above 50. If this continues to see strength, this might be signaling, okay, this might the market might not be believing this, you know, inflation's not transitory narrative. So we'll monitor this and how it goes. And another thing to point out here is if this continues to rise, it could really help the reflationary trade that we've been seeing. So, and there's various stocks right now that have been kind of beaten up. And if they start now performing and we start seeing this rise, stocks like maybe CCJ would be one to look at. And then various steel stocks have been pulled back, but if they're, you know, they're could be balancing, finding some support, getting their footing right now, and that could really add some nice momentum into a reflationary trade here. S&P 500 closed at its all-time highs. above the 5 EMA, above the 20, above the 50, above the 100 and 200 moving averages. Full bull mode here still continues, matching the script to seasonality. If we break down to the 15-minute time frame, a little bit of a negative divergence on the shorter term, but overall, the 5-day moving average is inclining, and the price just continues to just be this relentless drift higher here. So, you know, volatility is getting crushed so far. It's at rock bottom readings, not rock bottom, I shouldn't say that, but you know, in the last year or so, it's at the lower readings, and we got to just be mindful that if once this economic data comes out, if the market interprets it as good news, perhaps the VIX can crush down to around 14, 15, or a little bit lower. So we'll see what takes place there. Another note, but I don't have the chart up, is the 2-hour time frame is also overextended, overbought. IWM here on the 15-minute time frame, we possibly have a little inverse head and shoulders here. I like this setup, especially if the 10-year is rising here, where the 20% of the holdings for the IWM is for banks. So if the banks start to perform here, that could be something that we need a little additional boost here for the IWM. So what I really like here too is we moved up, we had a little bit of a breather here, we moved back up, we had a little bit of a breather, and that to me is putting in higher lows. So if we start breaking above this neckline here, it could really well propel us past this previous top around 233.50 and higher. So that is a trade that I would be really looking forward to placing coming into potentially tomorrow. So we'll see that. And if you look at the banking index, we're looking at the BKX. This is now back above the 5-day moving average, has a little bit of an ascending triangle right here. You can see price action was coming up to resistance, then pulling back, up to resistance, and then pulling back. So it's building higher lows, suggesting that the bulls are making some progress. The price is above the 5-day moving average, so if we start getting above 126.50, this can also be what we need to see a stronger move to the upside. We'll continue to see what takes place, and we got to really pay attention here to the TNX, or you can look at the 10-year yield. This is the 10-year yield. It's price percent oscillator down here. You can see has been flattening out, almost bullish crossover, and it's been in this what am I trying to say here? Channel, this flag pattern potentially. You can see here is a low to a lower low to a little bit of a lower low. Meanwhile, the RSI has been kind of trending up here. So that can be a bullish little move here. I'm not going to read too much into it. I mean, it was a good day today of 2.56%, but it's still relatively flat. You can see at the close at 14.8, which is 1.48% on the 10-year. If like it's just in a sideways slop. Like to really get some confirmation here, we need to see it break either to the upside or to the downside to really determine where money should be. So it's a very difficult environment to navigate right now. If it starts breaking down, that could really help the growth sector. If it starts breaking up, it might significantly help the value stocks. So we'll continue to monitor it. The DIA, this is the Dow Jones Industrial Average ETF, been consolidating here, boom, boosted through that at the end of close. It's above the 5-day inclining moving average with a negative divergence. So what do we got to look for here? I wouldn't be chasing into this, especially if we have a gap up. That's just not how I personally trade, especially on the short term. You want to see it, pull back a little bit, or maybe gap up, then pull back, reset these indicators, and then potentially break through that previous high. So continue to watch this. Look for pullbacks to the 5-day moving average. Those can act as areas of support too as well. We also have some support right here where this open was 345. So keep an eye out there. The transports pressed higher today too. We had that ascending triangle, and just look at this gap, ramp, and then pull back and then ramped up even higher. So very strong day for the transports, getting a little frothy in my opinion. Negative divergence. So you would like to see this kind of crack down here and reset the RSI, reset some internals here, find some support, and then start moving further to the upside. So careful chasing that. The Qs broke down from this rising wedge, but it wasn't with like significant force. It just broke down, channeled sideways, not much movement. Then we came down, retested the 5-day moving average, the inclining moving average, and we found support there. Then we bounced up, we pulled back, and then we broke through that high. That's where it's good entry. So this is what I've been saying. So if you pull back into an area of support, it bounces. What you want to look for is, okay, see if it has a continuation move. So it pulled back and then it broke through this high and then it forced forward a little bit stronger. So we're still above the 5-day moving average. This is still in bullish context. Just know that, you know, the problem here is if the 10-year continues to rise, that could put more pressure on the Qs. Semiconductors too. This is interesting. Now, semiconductors have been on a monster tear, so seeing this is actually quite healthy. However, if we start breaking down and heading lower, semiconductors make up a huge portion of the composite. And, you know, if the NASDAQ composite, and if these start breaking down further, it's going to be hard for the NASDAQ to really continue its push higher and higher. So we're forming a little bit of a bear flag here. The moving average, the price did get below the 5-day moving average, but it is still inclining to flattening out. So just you know, be patient here. See, it has to digest these gains, and we got to see how that plays out. Now, this is where it gets a little bit interesting. Gold had a somewhat strong day, right up $5, and I'm going to actually say it's actually a pretty darn strong couple of days. And the reason why here I'll get to soon, but you have a positive divergence, so it's kind of flattening out here. It's trying to find its bottom. The 26-day cycle is up in a few days here, so perhaps that's where we start taking off. I'm not too sure. The price percent oscillator is crossing itself over, so it might be trying to do a bullish crossover. I'm not going to put too much weight on it at this particular point in time. But what I said this is actually pretty strong is because if you look at the dollar, the dollar's breaking out of this bull flag. And typically, if you get a strong move like this in the dollar, well, the precious metals don't hold up too well. So the fact that gold is holding up right here is a little bit perplexing. So it's very hard to determine. So either one is lying and one's going to start breaking down, or, you know, if some sort of, intermarket principles are suddenly changing here. Also to note, the dollar, being that it's cranking up higher and higher, the S&P 500 moved up higher too as well today, and you typically get an inverse correlation between the two. So when the dollar breaks down, you see S&P 500 move higher, and then when you see the dollar spike higher, you can see the S&P 500 move down. We've called that out. So we have a high, a lower high, a lower high, and then you have a low, a higher low, and a higher low. So you can see the inverse correlation. And what I find interesting here is that this dollar has been screaming, and I don't really hear too many people talking about this. And the S&P 500 here is touchdowning at all-time highs, cracking above that 4,300. So it's a very, very interesting time. It matches seasonality, so it's nothing to really trip out about too much. Sentiment's getting very, very frothy too as well. The dollar is breaking out of this bull flag. We'll see if that continues. Gold's holding up. The 10-year yield's moving up a little bit too as well as far as today. We have some signals suggesting that the reflation trade is where you'd want to be starting to press and start moving your money there. It's a very, very difficult environment to navigate. So, for example, when I'm just in, actually, no, not even for example, but I'll go into my concluding slide. It is a very difficult environment to navigate. Meanwhile, when you scope out, look where we are on the quarterly chart. The 5 EMA is at 3961, okay, the quarterly, and then we're trading completely outside the upper Bollinger Band. That's just like what we did with transports, and we talked about it when it was a big green candle outside of it. So, if transports can do it, S&P 500 could do it too as well. But just be very mindful that, when you're purchasing individual stocks and so forth, the broader market, it's trading completely outside of the upper Bollinger Band on the quarterly time frame. And that is, I don't think that there's been a time in history where that's ever happened. So this time is pretty different, I would say. Now just kind of wrap up my thoughts. I feel like I kind of just did with all of that. My approach to the markets as of right now, I've been looking for individual real estate stocks because they typically perform well in consumer discretionary. But a lot of the setups that I'm seeing are from other assets, so more like value plays. I talked about one earlier today, CCJ. I got into RIG actually got into it a while ago. If you follow me on the Discord, you would have known that. But I emphasized that trade recently, and we saw some big moves out of that. So looking to scale some profits there. It's a stock picker's environment in my opinion. You have to be very agile, and you have to find really quality setups and really manage your risk and look for just high quality risk to reward setups. and just go from there. That's all I got for you on today's episode, everybody. Have a good day.